Hi, I'm Nick from Kingfisher Finance Group. We're a boutique mortgage brokerage that specializes in helping investors build long-term wealth through property. Today I want to talk to you about what it actually takes to pay off your home in 7 to 10 years. No fluff, no hype, just the reality of how it works. And let me be really clear from the start. There's no magic hack, no secret product, and definitely no expensive pay off your home early course that you need to buy from some online guru. The truth is, the strategies that work are straightforward, but they require discipline, a clear plan, and a focus on using your money more effectively. If you've spent any time on YouTube or social media, you've probably seen people promising guaranteed ways to pay off your home in 7 years or less. But here's the reality. They're usually trying to sell you something, a product, a course, or a service that benefits them more than it does you. There's no single hack that magically saves 20 years off your loan. What actually works is understanding how your loan works, structuring it correctly, and being intentional about every dollar you put towards it. One of the first tools I want to talk about is the Humble Offset account. An offset account is simply a transaction or savings account linked to your home loan. Every dollar sitting in that account offsets the balance of your loan for interest purposes. So if you've got a $500,000 home loan and $50,000 sitting in your offset account, you're only paying interest on $450,000. Some companies will try to convince you that offset accounts are bad and that you should use a redraw facility instead. Why? Usually because they want you to use their white label redraw product. But in reality, an offset account gives you more flexibility, transparency, and if used well, can save you tens of thousands in interest on the life of your loan. But we'll come back to this a bit later on. So now let's look at an example of how quickly you might be able to pay off your loan without actually changing your lifestyle. Say you've borrowed at your maximum borrowing capacity. You might think that because you've borrowed as much as you possibly could, you won't be able to fast track your mortgage at all, but you can. When the bank calculates how much you can borrow, they use an interest rate buffer currently at about 3% above the actual rate you'll pay. This means if your actual rate is 6%, they're assessing you on your affordability if you're paying 9%. So what happens when you get your loan? In reality, your repayments are much lower than the stress tested amount that the banks use. That gap means you could make extra repayments without actually changing your lifestyle. For example, let's say your maximum borrowing capacity is $750,000 and you use all of this to buy a home with a 6% interest rate. During your mortgage application, the bank is actually testing to see if you can afford this $750,000 debt with a 9% interest rate. This means with a 30-year term, your repayments are about $4,500 per month. But the bank is making sure you can afford to pay about $6,000 per month. So if you take this logic, you'll have about $1,500 extra per month that you can pay into the loan or offset account, all without cutting back a single expense. If you were to do this extra payment every month, you would reduce your loan term by over 13 years. This is a basic example, but hopefully shows you what's actually possible if you don't want to sacrifice your lifestyle. Now let's get into what it actually would take to pay off your mortgage in 7 or 10 years instead of the typical 30. Let's use that same example, a loan amount of $750,000 with an interest rate of 6% and a loan term of 30 years. If you want to pay it off in 10 years, you would need to make repayments of over $8,300 per month, which is an extra $3,800 per month compared to the standard repayments. If you wanted to pay it off in 7 years, you're looking at roughly $11,000 per month, which is $6,500 extra per month, more than double the standard repayment. Clearly, to hit these numbers, you either need to 1. Significantly reduce your expenses, or 2. Increase your income, or ideally you want to do both of these. This is where budgeting, side hustles, career progression, or even using investment income can make a huge difference. You can also accelerate how quickly you can repay your home by not going to your maximum borrowing capacity. In the same scenario, if you decide to buy a smaller house, borrowing $600,000 instead of $750,000, you could do a lot more without changing your lifestyle. So if you look back at your maximum borrow capacity of $750,000 being assessed at a 9% interest rate, which ends up being about $6,000 per month in repayments. But the actual repayments on a $600,000 loan at 6% will be $3,600 per month, theoretically leaving you with over $2,400 a month as extra repayments without changing any of your income or expenses. This would result in you paying off your loan in less than 12 years, 5 years quicker than if you borrowed the full $750,000. Now this might sound strange coming from a mortgage broker talking about paying off your loan, but I don't believe you should solely focus on paying off your home. If your only financial goal is to be debt-free, you might miss bigger opportunities to grow your wealth. One powerful strategy to look at is debt recycling. Debt recycling is where you gradually convert your non-deductible home loan debt into tax-deductible investment debt. You do this by paying down your home loan and then reborrowing those funds for investments, typically shares or property. This means your overall debt might not reduce as fast, but the bad debt, your home in this case, is replaced by good debt, which is an investment debt that helps generate income and potentially grows in value over time. Done correctly, this allows you to build wealth while still moving towards paying off your home without having to choose one goal over the other. This is where it can be a great advantage to use offset accounts, as it provides you with a lot more flexibility in how you use and recycle your money and debt. If you want to know more about debt recycling and how you can use it, I have a video link down below. So here's a few final points to wrap this up. There's no magic trick, just smart structures and consistent extra repayments. Offset accounts are one of your best tools, so use them to your advantage. Use the bank's serviceability buffer to make extra repayments without actually changing your lifestyle. If you want to pay your loan off in 7 to 10 years, be prepared to significantly increase your repayments or offset contributions, which usually means cutting expenses, boosting your income, or both of these. Don't neglect investing along the way. Strategies like debt recycling can help you do both. If you want to figure out the best approach for your situation, whether it's paying off your home early, building an investment portfolio, or both, book a chat with me. I'm an investment-focused mortgage broker, and I help people structure their loans and strategies for long-term wealth. The sooner you start, the faster you can get ahead. So reach out today.